G'day guys, welcome back to the Devon Too Good investing channel. Today in this video we're going to be doing an Alibaba sum of the parts intrinsic valuation to try to work out what possibly might be a good price to buy Alibaba. And for this valuation I'm going to be doing three cases. So there's going to be a bear case, there's going to be a base case, and there's going to be a bull case. And for each of these cases I'm going to be valuing Alibaba's core commerce business, I'm going to be valuing their cloud business, and then I'm also going to be valuing their other businesses such as their logistics business and some of their consumer services businesses as well. I'm also going to be valuing the Ant Group stake that Alibaba has and also net cash, and then eventually we're going to get a fair share price. And we're going to grow that out over the next 5 years out to 2026. And then we'll see what kind of returns we can get for each case. So let's get into the first case here. First case is the bear case. So in the last 12 months, Alibaba's core commerce business did $108 billion in revenue. And as a result, they actually produced $24.4 billion in operating income, which gives us a operating margin of 22%. So if you slap on a 10 multiple for this business, remember this is the bear case we're talking about, it would put the value of the business today at $244 billion. And we want to find out what it's worth 5 years from now. So what we're going to do is I grew this revenue out by 8%. That's in a bear case what I think the core commerce business will grow. And also I've decreased the margin to 18% from 22%. And this is mainly because of the increased competition that Alibaba are going to be facing. And I do think in 5 years the competition will be a fair bit stronger than what it is now. So that gives us an operating income of bit over 28 billion, and if we slap a 10 multiple onto that, that's going to give us a 2026 core commerce business value of 287 billion. So the next business we have to look at is the cloud business. So because the cloud business has only just become profitable, I don't have enough data to use operating income here, so I've used a price to sales multiple. And currently, from the last 12 months, the cloud business for Alibaba did $11.2 billion in revenue. So if we add a 6 multiple here, that gives us a current cloud business value of $67 billion. So a price to sales multiple of 6 is pretty low. However, because it is a Chinese company, you could argue that it does warrant a lower multiple in this case. In the US, a lot of these cloud businesses are demanding multiples in the double digits, so this is a fair bit lower than what some of these American companies are commanding. So of course we're going to grow this out into 2026. So I've used a growth rate of 15% per year, which is pretty bearish compared to most people's analysts, but again, this is the bear case. And if we've got a price to sales ratio of 6, this gives us a 2026 cloud business value of $135 billion. So as you can see now, the next segment is the other revenue. And in the last 12 months, Alibaba produced $5.4 billion in other revenue. And over the next 5 years, I've grown it out by just 3% because in this other revenue segment, they've got some businesses that are growing quite quickly actually, but then they also have some businesses in there that aren't really growing very fast at all. I do think 3% is very, very conservative here, and I pretty much wanted most of the weight to come from the core commerce and the cloud business, and I've used a very small price to sales ratio here. But that gives us a future value for the other businesses of 12.5 billion, which is easily undercutting it. And in fact, you could probably argue just their logistics business that Alibaba have is definitely worth more than the $12.5 billion like right now. So this is the bear case. Moving on to Ant Group. So I've got a value in like a current value of $20 billion for Ant Group. This one's kind of tough because it is a private company. Alibaba own a 1/3 stake in it, and back in far out, it must have been late 2020 now. Time flies. But back in late 2020, Ant Group were trying to IPO, and analysts had them at about 300 billion at that time. And I think you could argue now that, hey, they're probably worth they're probably worth 100 billion if we're being real. Like, pretty much all of China, anyone who has the internet in China is a Ant Group customer, just about. And the business has been, growing at a decent clip. Although moving forward, it's probably going to grow slower, especially due to the regulations here. But I've put a value here of their 1/3 stake of 20 billion for the bear case. And I've grown it out at 5% a year. So we get a 2026 value of about $25.5 billion. In terms of net cash, they're sitting at $47 billion. And I've just left it the same for the purpose of this. And if we come down now, you can see that they got a total business value currently of $389 billion. And in 5 years, they'll grow out to be $507 billion. So if we factor in shares outstanding and we assume that it stays flat, Alibaba do stock-based compensation, but they're also buying back shares at the same time. So I'm predicting that it's just going to stay the same. And you can see that we get a fair share price of $144 currently, and then in 2026, a share price of just under $189. And if we factor in a share price of $85.84, that is a 17% CAGR from today. And I feel like this bear case is very conservative. So you could say a conservative 17% return if this model ends up playing out. Now, if we move on now to the base case, I'm a little bit more aggressive here with my assumptions. So all these values to the left here are the same. However, the only ones that change are our 2026 values. So essentially for the core commerce business, I am estimating 10% per year growth for our base case. And that makes the core commerce business in 2026, that's a prediction of $175 billion in revenue. And I'm also going to assume the margin does decrease here. However, I'm not going to be quite as aggressive. I'm going to say the margin decreases to 20%. So that's going to give us a operating income of just under $35 billion US dollars. So if we apply a slightly more aggressive operating income multiple of 12.5, that gives us a 2026 fair business value of $437 billion. And then if we jump down to our to the cloud business, I'm predicting 20% per year revenue growth here. And if I apply a price to sales ratio of 8, that gives us a 2026 estimated value for the cloud business of just under $223 billion. And then for the other revenue, I've used a 5% revenue growth rate and a slightly more aggressive price to sales ratio of 2.5. This gives us a business value here of $17 billion. Then for Ant Group here, I've bumped up the Ant Group stake worth here from 20 to 25 billion for the base case. This is just being a little bit more optimistic, and it gives us a future value here of just under 32 billion. I've left net cash the same for the base case, and I've left all this shares outstanding the same. The business value in 2026 will be 756 billion based on these assumptions here. And if we factor in the current share price, it would be a 27% per year return based on these assumptions, which again, they're not that crazy. They're definitely more optimistic than the bear case, but I honestly don't think that this is crazy whatsoever. So if we go to the bull case, this one I do think is kind of sort of bordering on the unlikely side. However, we're going to go into it anyway. So I've assumed core commerce revenue of 195 billion in 2026, and this represents 12.5% per year growth. I've also dropped the margin. I can't imagine the margin not dropping over the next 5 years due to the competition. But I've used a larger multiple of 15. This is by no means a crazy multiple, even for a bull case. But this will give us a core commerce business value in 2026 of 587 billion. So if we now jump down to the cloud, I've predicted 25% per year growth here. And if we use a price to sales ratio of 10, which is getting pretty high, but then again, it's not even that high compared to some other cloud businesses in the US. But that gives us a business value of $341 billion. And then if we factor in other revenue here, I've used a growth rate of 7% and a price to sales ratio of 3, which gives us a business value here of just under 23 billion. And then for the Ant Group stake, I've assumed it's worth 30 billion right now, and it'll end up being worth 38 billion in 2026. And then net cash has stayed the same, and we'll get that business value in 2026 of over $1 billion if this scenario does play out, and that would give us a crazy CAGR of 35%. I do think this bull case is probably the least likely out of the three. I definitely think we're pretty likely to land somewhere in between the bear case and the base case. It's always best to have realistic expectations. Who knows what might happen with regulation risk, and who knows what's necessarily gonna happen with China and how everything's gonna play out. I do have other videos that does detail the China risks where I do state my opinions there, so you can go watch those if you're interested in what I think, as I have done a fair bit of research into it. But guys, thanks for watching. Make sure you like and subscribe, and see ya.